Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you have an amazing day. Happy Monday to you. We're going to open up with a very important news article regarding BitGet exchange requiring KYC, and then we're also going to talk a little bit about some important things I think that are good to recognize too. With Elliott Wave, we could be closer to the bottom here based on the way that we are seeing this play out. And of course, some high block capital data, talk about leverage delta, and of course, net longs versus shorts. So all important stuff. Be sure you stick around to the end and educate yourself as much as possible. Once again, we have a summer sale, cryptocash.tech, link down below for our premium membership, which allows basically you have access to our awesome, amazing Discord community here, as well as a handful of good resources that teach you how to become a better trader, right? Again, some private videos there as well, and obviously our signals, where we do take some decent profits. Injective was our most recent trade that we took. That was basically over the weekend. We're going to open some new trades here today based on this analysis, but just to kind of open with some important information. So BitGet is requiring KYC now. So this is available on my Twitter, of course, I have this information up. But generally speaking, KYC, basically starting September 1st, they're going to require new registered users to commit KYC, and whoever's already previously registered through October 1st, they'll need to KYC as well. So all the instructions are here. The links are available on my Discord, of course, if you're curious. That is in our Discord under announcements. I sent this information here out this morning. So again, just some important stuff there, but the alternative there, keep in mind, it's not all doom and gloom. We do have you covered. That's the reason why I've partnered with BingX for quite some time. They do offer a significant sign-up bonus if you use my link. And more important, I provide you with no KYC or VPN requirements at this time. So this is the only exchange that I'm aware of that has leverage up to a pretty significant amount available without KYC or VPN here in the US. And Canada as well. I think UK also factors in. So just some friendly advice there, kind of what we're talking about earlier today in our communities. So, all right, so what we're going to do, we're going to talk about Bitcoin here and see what's going on. What I would preface with here is just some quick, Elliott wave theory. In other words, oftentimes when you have this 1, 2, 3, 4, 5 pattern, which we've seen here recently, the top was 31,800 as a close approximate. There's typically an ABC pattern, a lower low and two lower lows and a lower high. So we've seen this first lower low down there to about 28,600, bounced off of this level here at 30,300, and it came all the way down to 24,100. Hard to believe I'm actually saying the words 24,000. But that said though, this hypothetically is the lowest point. I like to emphasize the word hypothetical because this truly hasn't found its bottom yet. But if this is the bottom, we won't know that for a little while, then that is likely to be it. Okay, so for lack of better terms, there's a decent chance the price will, I wouldn't say necessarily recover immediately. I do think we're going to see this range here upwards about 30,000, retested at least one time in the near future. And when I say near future, we're talking probably a couple months here. I don't think we're going to see this recover immediately tomorrow. Stranger things have happened, but it's really rare for the price action to just bounce right back. Now, if you look at some examples here, just to kind of give you some ideas, the price had to bleed out pretty strong, pretty hard for some time before it recovered. Okay? And this instant recovery is very unusual. That was a fundamental catalyst. Right here, from a technical standpoint, the price will probably have to work its way up these channels before it can continue to retest this level. The likelihood of it going right straight through it is pretty low. I hope I'm wrong that it just happens, but traditionally, based on technical analysis, it's unlikely for the price to just shoot straight through those levels. Again, unless we see $1.6, $1.7 billion in 5 minutes or less, we're not going to see that. Okay, again, that's what happened before to cause the price to come down. So just kind of some heads up there that Elliott wave theory is telling us that this should be the lowest low, and hypothetically we should be able to continue to increase from here, but I would expect it to continue lower before it doesn't, right? Just kind of one of those things where you want to expect the worst, hope for the best. So that being said, some moving averages were below all three, of course. That does create a new resistance at about 27,300. So my speculation is the price is going to come up here to this 27,000 range and get rejected and possibly make one more lower low. So again, that's purely speculation, but I'm considering a short between 27 and 28,000 just based on the moving averages and of course the resistance level we have there. Now let's talk a little bit about this here too, because even though it doesn't really show, there is somewhat of a fair value gap here in the recent past. You got to recognize this candle will get filled eventually, but I don't think it's going to happen immediately. We also want to recognize too, and I don't think I drew this in my charts here previously, but when it comes to CME futures, there it is. Yeah, I did put this up on my Twitter, come to think of it. We have a significant gap here that occurred during traditional business hours. That's how fast the price moved, where we gapped down from 27.5 all the way through to 26.8. Okay, so this will inevitably get filled. So again, a short closer to 28,000, 27.6 would make ton of sense, because the likelihood of the price coming up to fill that and then turn right back down around is statistically higher than not. Okay, just something to kind of think about there. Again, those are CME futures. Those gaps get filled fairly regularly too. So hypothetically, a long to 27.6 and a short from 27.6 to wherever might be appropriate. It's a little bit more towards what I'm leaning towards. Again, I hope the price continues higher, of course, but there's a general sense of that could be the case. All right, so we have a strong MACD divergence. Nothing's changed there, but it is losing its momentum. Keep that in mind. As we continue to go sideways, we're building that foundation base of volume. You can also see RSI is still hanging out at 20. My goodness, that is astronomically low. It's very, very rare to see RSI that low. In fact, let's just do a quick little perspective here. On the daily, last time we saw hit that low was June of 2022, when the price action was as low as 15,000. That's when we saw the RSI stuck on stupid at 20. Okay, and it did recover inevitably. I wouldn't say it was massive, but it did within a couple of months recover about 30 to 40%. And that was before it laid down again. Okay, so again, just keep in mind, RSI is not a full-on indication of what you should or shouldn't do. It just helps you understand the general consensus right now. We are extremely oversold. Hypothetically, you'd like to think that we're just going to go up from here because it's oversold. Doesn't always work out that way, but I would like to think so, and I do think it's slightly more likely we're going to see a retest this 27,000 to 28,000 range before we see anything lower. This could very well see be somewhat of a dead cat bounce. It wouldn't be much of a bounce, but it's still a dead cat, if you will, where the price comes up and rejects off that previous support range, which is that low 28,000 range, upper 27. Okay, so 4-hour time frame, RSI also equally extremely low. Commonly it bounces off 30 in the RSI, but that didn't happen. We continued lower with $1.6 billion in liquidation in about 5 minutes. That said, we got a convergence here that's starting to lose momentum. So all in all, 4 hours not telling us that we're transitioning to any type of positive momentum, and that this little potential run, whatever that looked like, whatever that was, is almost over. Moving averages are catching up, but they're taking their sweet time, of course, because the price drops so fast. In truth, we're not going to be able to get any confirming factors for a little while. So if you're taking along right now, you're kind of shooting in the dark, but also kind of using an educated assessment and the fact that the price could recover immediately. Now, I don't think we're going to see a massive recovery, but again, I'm leaning slightly more towards the price increasing first before it decreases. Again, that's kind of what I'm thinking. So I would say it's probably safer to anticipate some profit targets between now and 27,000, and then the price to reject at this 27/28,000 range. Once again, based on that CME gap getting filled, fair value gaps, and of course, the amount of liquidity we're seeing in that range. Okay, or at least previous liquidity for that range. So 1 hour, let's go ahead and wrap this up here and call it a day. Ichimoku Cloud, again, range-bound activity, not a lot of confirmation there. We're not seeing any kind of confirmation here for TD sequential either, minus a massive overextension in the past. If we do look at Bollinger Bands, you can see we're starting to compress. And as it starts to tighten, more likelihood of the price action expanding, if you will. So anytime you see Bollinger Bands kind of get really close, specifically on the 1 hour, you can see some kind of movement is going to happen within the near future. So obviously a move is going to happen this week. I think it's pretty likely. I don't think we're just going to go sideways here. But again, as we continue to build this volume base, there's a chance that we will see, of course, the price action move. Let's take a quick look at the volume profile on the daily. Just to touch on this here, again, strong resistance at 28,000. That'd be a great place to consider a short based on the volume resistance level. We got the second most amount of volume if you kind of compare it with the previous at 28.7. So again, sorry, I misspoke, 26.7 of 27,000. So again, the price will probably travel within this range and likely get rejected based on that volume that we're seeing there. Okay, so do not expect the price just to instantly recover. If it does, it would be somewhat of an anomaly. If the price does recover, it should be slow and steady. And we're tentatively at the base, but keep in mind it could go lower. We could even see a retest of this low 25,000 range. And then, because a lot of times what will happen is it'll retest the most recent low, which is this guy here. And then it will split down here to grab all the liquidity in this range, and then we'll see the shot back up. So if it does continue to decrease, I do feel that the low 24,000, mid 25,000 range is probably the likely low. But once again, we don't know until we get there. So where's it going to go? What do you think? Comment below. Let us know. I'd love to hear your feedback. And of course, appreciate all of the support I've been receiving here. I've got some awesome feedback in my Twitter, my Discord, and all in all, just a lot of good places. And I greatly appreciate the wonderful feedback, and happy to have helped you all, here, there, and everywhere, whatever that might look like. So thanks again for watching. Hope you can join our Discord. Quick favor, if you could, just jump on over to our Discord and get cranking there. We got a really cool community here. We're having a lot of fun, and I can tell you, yes, there are some unfortunate doozies, but generally speaking, it's a really cool, awesome environment, and we greatly appreciate everyone jumping on over there and having some good times. Thanks again so much for joining me here. Have yourself a great rest of your day. We'll see you in the next one. Take care.